sales for the month of February have been fairly strong, especially in terms of the tractors. Escorts did report a good amount of positive surprise in the February auto sales, with sales growing slightly over 30% mark. And if you look at the overall commentary coming in from brokerages, for instance, Motilal Oswal does state that tractor volumes have grown close to around 26% as supply side issues have been largely addressed. Increased Rabi acreage with lower inventories could support wholesales in the coming months. Growth momentum in tractors, passenger vehicles, three-wheelers, two-wheelers have been fairly in line. However, growth momentum in CVs is still slightly below the expectations. We at ET Now, in fact, caught up with Escorts management. We spoke to Bharat Madan Group CFO in order to get an understanding of what really led to such a positive surprise in terms of the sales. Mr. Madan did mention that demand has been particularly strong, and next few months we should be seeing good momentum to continue in terms of demand. The rural cash flows have been strong. However, beyond the month of June, it will all depend how the monsoon shapes up. In fact, in the last management call also, management had stated that demand for tractors has been positive across the markets, with strong Rabi season. Outlook for Q4 is very strong. Farm ecosystem indicators have been positive, and hence growth momentum should continue. At that point in time, during the management call, they had also mentioned that dealer inventory was at all-time low during the festive season as well. Today as well, Mr. Madan did mention that they already did take a price hike in the last quarter, which took care about the commodity price inflation until the month of December, and they do plan to take further price hikes in the coming quarters due to higher commodity prices and higher input costs. In fact, management also mentioned that overall the commodity prices have continued to move up, and normally the industry trend has been to pass on the cost increases, and they will be watching out for again how the industry trend shapes up. In fact, management also had reported 18% margins in the last quarter, which had been at several quarters high, and they did state that the last call that the tailwinds related to mix would normalize, and lower variable marketing expenses and certain fixed costs are likely to return, but more or less they should be planning to take price hikes in the coming quarter. In terms of the order book, management did mention that they have a strong exports order book, and also they did mention in the call, in the last management call, that they plan to increase the exports by 3 to 4x over the next few years. In terms of the commentary on the capacity, today Mr. Madan did mention that they have already ramped up significant amount of capacity, and this significant capacity ramp up should be able to help meet the demand over the next couple of years. They have already invested in existing plants on machinery and preparing the supply chain, and they plan to increase the capacity by mid FY22. So overall, fairly strong commentary coming in terms of demand, at least for the next few months, and expect Escorts to go ahead and take some amount of price hikes in the next quarter as well.